Good afternoon, Scott Redler, T3Live. Welcome to today's recap. So it is Wednesday's recap after a big time day yesterday. Typically you get a huge day, an igniting day. The next day thereafter, it's a digestion day. It's a day where you don't expect much. We came in today, I was like, you know what? Dow could be up or down 30 to 70 points. S&P could be up or down 6 to 7 handles, but there might be some stock action, some little trades to take. And then obviously if you're in positions, you need to manage them based on how extended they are from the moving averages and whether or not you're just ready to take some off based on the action. Now overall, closed pretty solid. If you look here at the chart of the S&P, you will see typical inside day. Just to give a quick little look, here is that gradual uptrend that is still intact, not even close. Here is that momentum uptrend that came in a little bit of jeopardy, then bounced back quick and then extended higher. And now this was today. Little inside day, didn't negate any of the power of yesterday's action, held in the top upper range. You want to take a closer look here because I like to judge the action. You judge the action to see whether or not anything changes. And as of right now, nothing really changes here, guys. This is the top third of this overall wide range bar, not negating much. Now, I sent out a note around 11 o'clock like I would normally do with some levels and some stocks, and I switched some gears and I exited some positions because they've reached my targets. I talked about a few different levels just in case I want to probe to the downside, and I'll show you on the spiders how I came about them, okay? Because everyone's like, how did you get that? How did you do that? Blah, blah, blah. Anyway, here's the spiders. Same thing, your gradual uptrend, your momentum uptrend. Here's your breakout. So if you look at the spiders here, they also small inside day, but there was a way to navigate it for cash flow. You look at the 3-minute chart, right? You look at the 3-minute chart of today's action, or let's even go a little bit further. You go to the 8-minute chart, okay, and you will see that the reason being, okay, that I put those levels out, because look at yesterday. Yesterday, coming into the close, this is where we sort of stalled, right? This is where we stalled, market wedged, market wanted to figure out if it could go up further on Fed day, and you had a nice push into the close, right? So there you go, nice little push. So you come in today, market tried to push, and this was a level, there were two levels of support here. I wrote 139.80 was a level of a shallow support, and then I went to the afternoon support and said 138.40 to 139.40 to 139.60 would be a level to maybe cover some hedges and see if you could buy back some strong longs. So this was the reason why I came up with this level. So this was support 1, very shallow. This was the level that is worth the look, that if the market was going to continue its very strong momentum, it would hold. And then it could have even really came into this breakout, which happened at Fed time, but it didn't even consider doing that, and it didn't even think about at all going down to the gap. So all in all, after a big move that we saw into the close yesterday, the market wasn't just ready to take out highs, and rightly so after the move that we've just seen, but it methodically came in, tested the afternoon breakout around 3 o'clock, that was the extension, and held. So now we have a new point of reference, 139.50, and we have the obviously top from yesterday, and this is your new inside range, right? And then here is support below and another support below, because if you go to the daily chart, you'll see that we're far away. Again, every time we get far away from the 10-20 day, you either need some time to let them catch up or test. And right here is your 10-day moving average, which is 137.44. That's a long way down, guys. So at this particular point, give it some sideways action, but it doesn't mean that you can't find action or things to do. The banks were a spot today where there was a little bit more volatility. Citigroup was downgraded based on the fact of some of the info out of their stress tests, and then Goldman Sachs had the op-ed talking a bunch of about the company, their organization, their mantra. And Goldman Sachs did what normally Goldman Sachs does, it pushes the envelope, and it definitely came in more than you would have thought if there was strong momentum in there. So now it just really keeps it to the upside, but it makes it a little tougher to trade and trickier to trade. Same way, if you guys remember, when it broke out right here, okay, we had that pull-in, and it should never have really broken this line if it was any good. Then you had a nice breakout yesterday, and to be honest, it really shouldn't have, if it was going to act normal, quote unquote, it should never really came in past here, okay, past that spot on the chart. Instead, it came down further than traders who bought the dip would have liked, but it's, again, still above the breakout of yesterday. It's still above a lot of different uptrends here. You know, it's still above the moving averages, so it's still fine. It's just Goldman Sachs being Goldman Sachs. Now, the reason why people like the JP Morgan trade is because JP Morgan doesn't push the envelope the way Goldman does. You could buy the dip more methodical. Obviously, it doesn't give you a big enough to pull in to buy, but that just keeps the speed and momentum there. And if you look here on JP Morgan, you will see it didn't do that, right? Look at the bar yesterday. Look at this wide range bar. Nice. And what did it do? It just hung out there. Went negative for a little bit, but big deal. It was down like 30 cents and is consolidating nicely. So if this were to flag again, this will continue, sorry about that, being the class of the group and the one that continues to lead, you know, the most. But someone asked me like why yesterday I went with Bank of America versus JP Morgan, which I say is always the class of the class. So if you come back to me, sometimes the best stocks don't have the most tradable patterns, in my opinion, where you have pivot points to grab, you have prices to gauge against, and sometimes it's easier than others. So yesterday, I didn't focus on JP Morgan. I watched it for leadership. Some of my other guys did, but I played Bank of America because there was still a tight pattern there, and at least I had a tradable gauge. So if you look here at Bank of America, I started buying it a few days ago. Okay, I bought it right in here, right when it held higher within this range. Okay, here was a nice tight consolidation pattern going sideways, consolidating, condensing this entire move. So I started buying it around here, knowing above 815 to 825, that's my area that the shorts are going to cover if they're short Bank of America, and that's going to be an area to ignite for those who think that it's going to go to 950.10. It's going to have to get through here. So once the news came out that they passed the stress test, I just got into like tier 3 or 4. Through that point, went home with just say a tier 2, sold some on the open and held some, and this was a nice tradable 2-day move. So that's why I focused on Bank of America. And percentage-wise, if you want to talk percentage, the 2-day move in Bank of America was a lot stronger than the 2-day move in JP Morgan. And if you talk about the move from January till now, the percentage gain in Bank of America was a ton bigger than JP Morgan, but it's all different. You know, if you're a fund, if you're an investor, if you're a trader, you know, there might be a better time when there's a better setup in JP Morgan to trade. Same way like Goldman Sachs had a nice little setup yesterday because he had that 3-day inside range. So it was worth the focus. And now after today's action, it moves down the list. Okay, same way with the casinos. Sometimes they're A trades, sometimes they're Bs, sometimes they're Cs. And right now, like LVS gave you a few nice cash flow trades. Sometimes it has a really good setup. Sometimes it's just trending. Like once it broke above, just say this point, it was not a great setup. But if you bought it here, it was just trending. Another good setup here was when it traded through 50, right? And then this was a really good setup because it was tight, ready for a breakout before reversing up here at the highs. So now there's a nice setup here, not a great setup, maybe a B plus setup, where you look here, it's back in the middle end of the range after a nice little cute short, maybe a scalp buy. Now it's proving that it might want to resolve this wedge to the upside. So, you know, here I'm long tier 1. Maybe tomorrow it gets above 56, 21 for some continuation. So that's on the radar. Win, I'm not long, but guys are trading it and they're having some success. Remember we talked about the retest here of this descending channel. Nice descending channel. Here was that 3-day move after off the charts with Kramer. Here was your buyable pullback right into the retest. And now it's, you know, coming back up. Looks like it's fine. If you're in it long as a swing, just hold it. If you're looking for a trade, perhaps it tries to get excited again and get up to that area and then continue. And then you had a different type of trade. In my report 2 weeks ago, I talked about Caesar, about a new issue that's going to take, you know, these things take 4 to 6 weeks before finally enough hedge funds or enough mutual funds have accumulated the shares after the IPO, after the deal. And I've been watching it at the corner of my eye. And then today I saw it perk up. And then also one of my sales traders hit me saying that he likes the action there. So if you look here on Caesar, different type of trade. Here is the IPO. Okay, obviously it went as high as 18. Since then, it's been just dribbling lower. It's been public now for almost 6 weeks. And then it put in a higher low right here. And I remember talking about it. This is when I did that segment, I think, for Kramer. Nice little tight base here. So the trigger really was when it went above this 1130. And then again when it went above this, like almost, excuse me, 1190. And it did so, if you put the volume in here, you go to basic studies, put your volume in so you could see the volume, okay? Here was nice volume compared to, the last month or so. So some people are behind it, and maybe, at some point it gets back to here, or who knows? You look at LVS, look at the move that has had with Win and MGM and this and that. Maybe it can make new highs and continue, but for now, this was a good trade. It closed on the high, so typically the good book says if a stock closes on the highs, you take it home long. It should open up. So here is one level, okay, going across, and then here is another level. So this 1350 to 1450 should be a nice little area for it to get through with this move. It did have a nice size move today, so it might not get there tomorrow, but maybe it flags, you stay with some, and then you get to that zone, and then you figure it out from there. Look, if you look at something like in LVS, you go to the monthly chart of LVS, and you look at when it came public, and obviously it had that huge decline, but from here on, what was this? This was $1.38 to 55. That's one heck of a move. You look at Win, and in this same group, obviously, when it came public here, a long time ago in the turn of the century, in 2000 or whatever, or the decade, it went from below 20 all the way to 150 before the big sell-off in 2008, and then even from here, from below 20 back to 160. So this stock has a lot to prove, but it's in the infancy. And when stocks are in the infancy, if they prove themselves to have earnings power, which it could be a good trade and also a good investment for the long term. That's why I talked about Dunkin' Donuts. Remember I said I like Dunkin' Donuts a lot because it's a new issue. It's actually been public for, for almost 10 months. And if you look here too, this is not say similar, but here was the IPO low. And within 6 weeks, it made a move. So you could have bought it here at 26-ish, and it gave you a nice move back to almost the highs. So that would be almost considerable to like the 15 in what's it called, in Caesar. But anyway, gave you a nice move, and then it wasn't ready. And then finally, after it's a much thicker stock, different sector, so it's a different animal. But finally, after a nice move through this little channel here we talked about, it then got on its game, and he had a few different trades. There's a nice trade. I've been holding this thing and trading around it since last Thursday, right around here. Okay, and even today, it opened up above 32 and a quarter, sold some, then I bought some back on the dip, and it still looks really good. The weekly chart looks really good here, where it's just getting above the IPO price, and again, it's in the infancy of its lifetime. Whereas you look at Starbucks, and I don't want to compare it to a Starbucks, but this stock that came public, you go to the monthly back in where was it? All the way back here in '94. Had some volatility, but gave you a nice run for 2 years. But then if you look at it, what is this? Almost 94, about 2 decades later, here you are at 52 from after splits and splits and splits. So that's why sometimes new issues, which IBD says also, are the spots to look at within a year to 2 years of them coming public once they're in solid hands, because those could turn into huge 100, 200, 300% winners. So besides learning them early as a trader and staying with them and watching the action and watching the speed as an investor, you find the right ones, and it works. There were a lot that didn't work. Think about Dang, think about Ren, think about some of these new issues that were supposed to be like the Facebook of China, the Amazon of China, and you look at like Dang, and it's, look where that is. So sometimes it doesn't work out, and this needs a lot more time. You go to the daily, and it's just been really a very big disappointment, from 40 all the way down to 7 and change, even though we, remember we caught a little cute trade back to here, but this was a new issue that didn't work, okay? If you look at Ren, obviously a new issue that opened up at 20. It's taken a lot of time, looking okay, but still not ready. Then you go to like a Coors, where look where this thing came public. This thing didn't even wait. This came public, created a little pivot right here. Once it crossed there, off to the races. Okay, up to $50. This is already doubled. So, there are good ones to catch if you know how to find them, and if you know how to handle them, and if you approach them with the plan. Now, as far as some of the tech stocks, it's a little wishy-washy here. Obviously Apple was a runaway train. I had it overnight, sold it. This is the first time I'm not taking it overnight in a while, getting a bit frothy. I thought maybe there could be a cute type of pullback today with quad witching coming on Friday. Maybe they want to get everyone to buy the 600s too. If you look here, it's been actually, as crazy as it's been somewhat methodical. If you take a closer look here, because every time it came, and this was the first time it broke, held a 10-day, and then it eclipsed this high, gave you a nice move, consolidated. This time didn't hold the 10-day, but it really held the 20-day, and then it gave you a nice pivot through these highs and then extended. Same way, if you remember, when it traded through this pivot, okay, which remember you had earnings right around here. Oops, sorry. This was my entry when it didn't fill this gap. Remember we talked about buying it after the earnings, but we also had options into earnings, which were nice. And then here was that move that went parabolic before it reversed. So now it went above this part. Now it's in the same process, and we'll see what happens. But it is extended from the 10-day and the 20-day, so it makes it difficult. But ask a short that tried shorting it after the pull-in, it was just as difficult for them. So for me, I didn't trade it after the open because I just said, you know what, it could take away my day, it could take away more of the methodical money. Sometimes things are just too crazy for me that I can't handle, so I kick it to the curb. And a lot of people lost a lot of money fighting this today, so I'm happy I just avoided it. That TBT trade, woohoo! You know, I hate to give that, but you know what, guys, I've been trying this for 4 years with the concept that rates have to go higher, because that is the what, and then we caught the when. Okay, I've been watching TBT, TLT for the last 2 weeks, saying it looks like it's almost ready on the charts. And if you go here to TLT, you know, yesterday we had it on off the charts. Everyone in the virtual floor saw me go long the TBT. I tried it once before, not for 4 years. And look, high, lower high, lower high, lower high, lower high, curling over moving averages, closed below support. So the good book said take it home, you took it home, you got paid. Now the question is, how much more downside could it have? And it seems like it could have a lot more downside. So, you know, the trade ignited, you have a void to here. This is also a point of reference right there. So if you were short and started here, added here, this was a day to take some off because it might try and bounce there. Same way with the TBTs, which is what I chose because that was my style. I like to take a little bit more, something not as high priced. You know, here's that, you know, range going across. I think this is when I tried it the last time right here. And I got a little hurt, and I got away from it. I said, I'll wait till the next time because I'm not going to sit in it. I'm not a concept player here. I'm not a bond guy. I don't know exactly what the scoop is here. But PS, you know, I got it long yesterday and made 7% or so in 2 days in something that I don't really trade that often, but it had a chart, had a concept, and I went with it. And there you go. And now the next level really here, closing the highs, it could fill this gap up to 22. Now I talk about, you know, how to trade stocks in the first 30 minutes, and there's an art to it. There's an art if things gap up, some of them fill them and don't go anywhere, and some of them hold and continue. So if you didn't take the TBTs overnight, there was still a trade there. You go to the 5-minute chart here, and you'll see, look what happened. This is your gap up, right? Gapped up, hung out, didn't even come close to filling the gap. And then I remember talking about on the radio saying, I'm going to buy a little bit more above 2050. You could have bought it above the opening print, never violated it. It tested it right here, right? So a little scary. And then PS closed at 20.95, so you could have made 45 cents, which was what, about 2% or 1.5% or whatever it is. I don't have a calculator in my hand, but that's how you get involved if you don't take overnight because you don't like taking the risk. So it was a great overnight because according to the good book, which is my good book, which is my inner voice, and that's my experience, something closes above a range on its highs with decent volume. I take it home long, and then you could have even added to it, you know, with the first 30-minute trade closing the highs. And today you take them a little less because of the size of the move, but just stay with it a little bit. So different trades for different time frames for different risk tolerance. So all in all, digestion day today, still some things triggering, still things working around. The market's intact, a lot of good sector rotation. Some stocks are taking a rest, some are building new continuation patterns. Just figure out where you want to be, but be somewhere. So have a good night. Scott Redler, T3Live. See you in the morning with Brittany.